Good morning. Welcome to the Brew. I am your host, Lex. Today, we're going to continue our chat with the life of a trade, talk a little bit about some crypto ETFs. We're going to also look at an Apple covered call strategy and talk about how to protect your portfolio a little bit with covered calls. And whatever else Molly has in store. So let's get to it. Hello, Mal.
Good morning.
How are you?
I'm good. How are you doing?
Good. Always good to see you in the morning. Today's Taco Tuesday, stock trading day, something or other.
You mean it's margarita day?
Yeah.
It's margin
Tuesday.
margarita. It's margin margarita day.
Yep. I absolutely have margaritas on Tuesday. We do Taco Tuesday, believe it or not. We absolutely do that.
Right.
So yeah, I'm excited. I think we had a decent comeback yesterday. So when we first looked at the markets yesterday, by the way, a lot of red. You remember red makes us sad, green makes us happy, and then it was green toward the end of the day. So I was like, oh, happy
that's
times.
Great.
Yeah, I mean you can't have an up day every day. So
do we do a shrine and like light candles for green?
We could do that. I like
All
that.
Right.
So we left off yesterday, kind of an intro day for us, right? Get a little backstory, backdrop for everyone. We talked a little bit about certain lives of the trades, and we talked about where that trade goes. So we want to finish that up toward the end of the show. But you have something on your mind with this. What is it? ARC?
I have so much on my
mind. You have so much on your mind, but I'll let you do
which is not a good.
mind.
It's not a good thing for a blonde, but we're gonna take a whack at it anyway.
Okay.
One thing I'm excited about a life of a trade, although it's reductive, it's really nice because you've been doing this for so long, and a lot of people watching have been trading for a while, but there are some people who have never placed a single trade and they're just signing on and they don't have an account anywhere and they're trying to figure out what are their first steps. And in surfing, you give them baby waves, and so we might give them at the end of the show. You might give them a little tip on which stocks to focus on and what strategy to stick to. So just stay tuned for that. But let's kind of see what's going on in the world today. Let's just start with the big stuff. Sam Bankman-Fried from FTX was, I believe, sent to jail, and there's a lot of reasons why, but there's some talk of witness tampering. So we're going to go into FTX.
Is he in trouble? Yeah. Is he going
to get be in trouble. He might be in trouble. Yeah.
Oh no.
So
okay.
It is a spider web of surrounding events. So I think you and I will go into FTX later in a subsequent show. I think it's an important thing for crypto, and it's important just to know what's going on so that if someone asks you, it's just, you should know, the backstory, and will make it.
Yeah. Nice. Yeah. I have a question though. Doesn't it seem like, these new technologies, whatever they are, these new products, I remember, when, who was the guy who went to jail and died in jail? Famous Ponzi scheme guy.
Bernie Madoff.
Yeah. Bernie.
Bernie, Weekend at Bernie's.
I mean, Weekend at Bernie's. So there's always something. It's this crypto world is so new, and it's sort of I don't want to say the Wild Wild West. It really isn't so much that, but it is an unregulated, for the most part, industry. Now it's going to get regulated, and it's starting to.
Yeah.
But there's certain things that creeds and codes you have to follow, and I think Mr. SBF kind of commingled customer funds with firm funds, and that's probably a no. That's
yeah. So since we're having margaritas, I'm going to be a devil's advocate on this. So so when we say regulated, I'd like to look at what is the current regulation over our own dollar. So if you go into seeing who are the players who regulate, are there enough separation of powers for it to be have
Fair.
like a strong regulation that we can trust,
You
or
think I know
are
where
they
you're going.
meddling the waters a bit?
You're a conspiracy theorist. You're thinking that
Probably.
the people who are regulating also have their hand in the other part of the cookie jar, and how good can that possibly be, right?
You're right. The SEC has no banking history whatsoever.
All right. Well, I'm not going to opine on the SEC.
Okay.
That's all I can tell you right now.
All
I am
right.
staying completely away from that.
No, I know, and I'm gonna be. I'll step in the mud for the world, but I do think that the government gets a bad rap, and I think there's some really good, hardworking people in there, and we just need to make sure that we're. It's like a neighborhood watch. So who are the good guys? Who are the bad guys? And then
Yeah,
we going to take their advice, and to heart?
sure. Look at, I am not a huge big government fan, right? I think the government's good for just a few things.
Yeah,
In the case of the markets, you know, it's not bad to be regulated by a body, SEC or
absolutely.
FINRA. It gives a lot of safety to the
Yeah.
markets, right? I think that someone's watching out on the only, the big thing I have against it, and where I think it goes astray is you could get into situations where there's minutia and interesting little details about particular situations. And I find that when the SEC or FINRA gets involved, again, I'm not saying anything bad about them. They tend to have a one size fits all sort of mentality. And that's, I
Yeah,
think,
and
when you get into a little bit of trouble with understanding the rules and regulations. But it's okay. I think it's good though, at the end of the day, to have safety and know that someone's looking out for you.
I totally agree. And you have to have some sort of financial background to be regulated, to be working at the SEC, and
Hmm.
financial or legal background, and so just because you have that history does not make you a bad guy. So we just
Right.
need to. I'm more speaking to, um, take the burden of responsibility on yourself, as the people, to make sure that the
Hmm.
government that's works for us are actually working for us,
Hmm.
and always to keep our eyes out. And but I think I'm definitely not a conspiracy theorist. I have probably many friends who wish I were, but I'm probably not. But I
Okay.
do always like to keep my eyes out, and it's probably being married to someone raised in South Africa. You're kind of just always making sure you're aware of your surroundings, and that's
Hmm.
carried over into the financial world, and any regulatory, um,
Right.
body.
Right. Okay.
So,
I'm down. I'm down. It's all good. Just stay out of the
but we
regulatory soup. That's all you need to know. I mean,
right,
as a retail trader, though, it's almost impossible to get in trouble, right?
yeah,
It's you're already regulated at the brokerage level. So I
yeah,
mean, you
and
can
I think
click
in
buttons as much as you can click buttons, and that's about it. And look, if there's a pattern day trading problem, you're going to be tagged for it anyhow. They're not going to let you put yourself in trouble anyway,
right,
right?
and
So.
in defense of the retail traders, there's some regulations on the table right now to regulate, gamification,
Mhm.
and a lot of things. We'll dive into, some of the elements that allow retail traders to trade for free,
Mhm.
and if some of those go away, it's regulation that makes it more difficult for a retail trader to trade. We should also keep an eye on. So
Mhm.
there's a balance: protect the retail
Right.
trader and make sure that they can still play the game.
Okay. I'm down with that
Yeah.
too.
Okay. But this is
Good
the
job,
I have
Mo.
a feeling these are going to be fun conversations. These are going to be
I
juicy,
know.
fun ones.
I'm
Okay,
gonna
so
try not to let my political bias come out ever.
me, I think, right, we might be on the same page on that.
Ah,
So we
forget it.
might
They'll
have fun
figure it
on
out.
that. Yeah. And let me, we'll get off this soon, but I am not really, I have moved away from politics, and I more follow the money. So I just follow the money trail, and
Okay.
that tells me a lot more.
Right. I'm down. I am so down. Um,
Okay. Speaking of which, SEC,
mhm.
they've delayed Kathy Wood's ARC 21 shares Bitcoin ETF. So we'll talk a little bit about that.
Okay.
And NVIDIA, their earnings comes out August 23rd. And they have some AI GPU supply chain issues, but that's a really anticipated stock coming up. And this is a really interesting one because um, their market cap is 3x Tesla, which is a big deal. And but Tesla's revenue is 177.8 billion, and Nvidia's is only 27.
Mhm.
So that's market cap related to what they're bringing in is starting to learn how to look at a stock and learn what market cap is and how does
Right.
it relate to revenue and profits.
That's, I got to be honest, Nvidia is a stock I don't look at very much. I'm putting it on my list now
Yeah,
because I think I
and
like it.
Nvidia's was a gaming stock, so they used to just more focus on they used to focus on uh, graphics cards.
Right.
And there, when AI came online, by the way, I am actually pro AI regulation because
Mhm.
of the personalities that when they're building AI can be infused in some of these networks, neural nets,
Mhm.
and what are they building? How fast is it going? What is it? Or are we? Um, am I a humanist? Yes, I am a humanist. So I always
Mhm.
like I'm always concerned how that will affect humans, but I am also pro AI. So I'm pro regulation, pro AI.
Okay.
Um,
I'm gonna
uh,
put. I added Nvidia to the watch list.
okay,
I
great.
have to be honest. I didn't realize Nvidia is a $437 stock. I remember trading that, or at least following it a little bit back in the trading days on the floor. It wasn't nowhere near that, but that's impressive. So we're gonna look at a chart on that too. I'll pull that up in a
There's
sec.
And it'd be
Um,
neat to when someone's looking at something expensive, we've got fractional trading, and we have, I think this SIBO came out with nanos that we'll talk about down the road, and all of
mhm.
these really new features for trading so that the barrier of entry for
Yep.
someone who can't buy a
Yep.
$400 stock, they can, maybe chip in
Right.
$5 and get their friends together and do something together.
So
It's
yeah,
pretty,
that's interesting because we've gone to fractional shares in stocks, as we know,
yeah,
right? So you can buy and sell those. And I met someone at a conference I was at uh, whose new business is they're trying to fractionalize options, which I thought was interesting.
amazing. Yeah, amazing.
So the concept there is, and again, I don't, I think it allows, or at least from their point of view, it allows the smaller capitalized person to trade options and say, hey, instead of buying one option or five options, and I've got to put up X amount of dollars in margin, you can say, I have got, $1,000 to trade and invest, and I want to buy $100 worth of Apple calls or, whatever it is. And whatever that comes out to be, if it's a fraction of a contract, so be it. You can buy that, which I think is really kind of cool. And I'm trying to think, what's the downside? Well, if someone's got to take the other side of the fraction, right? So if I buy 0.25 of a contract, there's got to be 0.75 out there. So the person who's or the entity who's allowing you to do that will take
Yeah,
the other 0.75 because there's exercise assignment problems too, right?
interesting.
So you
Yes.
cannot exercise 0.25 or 0.75. You got to
Oh,
exercise
wow.
one. So
Right.
it's got to be a combo. So someone has I don't want to say counterparty risk, but someone has some risk on the back end balance of what's left in that fraction. Now I'm wondering if there's going to be a trading function where they can offset that 0.75 and send it out to the market again. So it's
Ooh.
interesting. I like it. I think it's pretty cool. I
Okay.
love the ability to give retail folks a notional amount of dollars
Okay. That is
to
a
trade
great
the
word. And
options.
that's a
Yeah.
great word, notional. You'll see it everywhere and you're doing research. So could you
Mhm.
explain notional?
Yeah. So the way I refer to notionals, and we do this in TradeHawk as well, is you take a certain sum of dollars, right? And you say, I want to commit $5,000 to this trade. Now, whatever the trade comes out to be in terms of a price, you're going to divide the price of the trade into your $5,000 and come up with a number of contracts that you can do for the 5,000. So again, I think I find this more in the retail world than in the professional world, but people, they're managing the size of their trade and their money with notional, and it's good. I think you'll find a lot of people on the internet who will profess that one of the best risk management concepts is managing your capital correctly and position sizing, right?
Yes.
So position sizing is good. And if you put a dollar amount to position sizing, all of a sudden it becomes better, right? So the
Yeah.
notional part of trading isn't a bad thing, I don't think. And we would never do that in the market maker side of the world, but I think it's a great concept for a retail person, because now all of a sudden they're dialing into risk management. You know how I feel about that discipline.
Discipline.
Super
Yes.
important, right?
Right. That's,
So yeah, I think
I
it's
would
cool. I
just,
think, yeah,
I
go ahead.
would highly recommend, and I'm looking at the camera, that you take that, rewind what Lex just said, and listen to that again, because that is probably one of the most important things you'll hear on this show. That is a big one. So
Yeah, it's
thanks,
it's
Lex.
important. I tell you, I'm gonna, every time we talk about trading and option strategy, and we'll tend to do that in the second part of the show. So we only have a half hour. First 15, we're gonna go over some news events. We're gonna look at the markets for a little bit. Then we're gonna take a look at a trade, typically. So
So
as we look
where
at
does,
this,
oh,
yeah, go. I'm sorry.
oh no,
Go,
you go
Mo.
ahead. Go ahead.
No, I was going to finish and say that when I talk about the trades that we do, it's always going to have a discipline component to it, right?
Great.
So we're going to
Yeah.
talk about the discipline part of why the trade had occurred, what my thought process was when doing the trade, etc. Okay.
You're the David Goggins of trading.
I don't even know what that means. Is that
Yeah,
is
so
that a
you
cartoon
everyone
character?
go no everyone go look up David Goggins, and that is Lex for discipline.
Oh my
He's
god.
an amazing ex-Navy SEAL, and he's
Oh, I thought you
he's the
said
guy
I'm
to
the
go
next
to.
Navy SEAL.
Yeah.
That's perfect.
Per-
Um, No. So we'll talk a lot about that and why. So you'll see it in kind of the nature of the things I like to do. And I see some of the questions you have on stocks, what stock to trade, what strategies, etc. So we'll talk about that too. Um, one other thing before we go to the markets was what? I forget.
oh yeah, so
That's
we're
what
I just
happens when
wanted
you,
to, I know,
when you
right?
when you do this every day and you get old. I
So
forget.
we're gonna keep an eye on Kathy Woods, and we'll talk about her a little bit later. But that's a really neat. She's just a little bit about her Bitcoin ETF. It's a passively managed ETF, so it's going to just follow the trail of the value of Bitcoin. This will be the first time in history um, that she will be actually holding Bitcoin, which is
Mhm.
which is a new thing. And normally people are using futures to create crypto ETFs. And
This is this
so
arc
this,
thing.
yeah, so this will actually, she will be actually holding Bitcoin, which will make it a little bit steadier in a
Yeah.
risky investment, something considered a risky investment. And
Right.
this is also one of those things where it's a great alternative to direct ownership. So
Right.
um,
So
uh,
they're launching this ARC 21 shares, um, and it's an ETF. So that means it's an exchange traded fund, right?
thank
So it
you.
trades like a
Yes.
stock, which is beautiful. We can buy and sell it. If they had options on it, we could do things with that as well. It settles in the ETF, so you actually get shares of this ARC 21. It looks like it's physically backed by actual Bitcoin in reserve, right?
Which will be the first time in history, which is an exciting
Yeah.
thing to have happen. And the SEC is just postponing it till September because they're saying that they're not fully schooled yet on Bitcoin and how that would work. So
Okay. Yeah, it looks like it's small. It looks like the assets under management for this product is around 100 million, which
okay,
in the grand scheme of things isn't a lot for something like
yeah,
that. And it was founded a year ago in 2022. Didn't know that. This will be interesting. See, I gotta be honest. I like trading ETFs
yeah.
and the like. And if I want to get into Bitcoin and have exposure there, I'd rather trade the security backed. Now I know if we have options on it, OCC is involved. If we have stock, it's just it's a good regulation. I don't say that a
Yeah,
lot, but it's a good regulation that I know I'm not going to one day wake up and say, where's my Bitcoin? I can't take delivery. Where'd it go? I
yeah.
like having that ability. So I would probably, for me, I'm always going to lean toward the listed sort of regulated world in terms of getting my exposure there. I don't know.
Yeah,
That's just
really.
me. I'm not saying that's right
Yeah,
or wrong. It's just what I like.
yeah. I am. We're probably on the same page. I agree. So really a way to bring it home and make it more tangible is, it's kind of a way to look at regulation. You can see, your police officers around your neighborhood. I like them there. They make me feel safe. and I
Right.
wave to them when they drive by. I really love them, and just make it's a balance. So to make sure that they are respectful of my privacy as well as they're protecting the neighborhood and I support them, it becomes that kind of nice that always must be tuned.
Right.
It's just a balance. It's going to be ebb and flow throughout history, and it's up to us to make sure
Yep.
we keep that balance.
For sure. Okay. Let's have a look at the markets. I have a bad feeling about redness today. Oh my gosh, would you look at this? Now what? Now what, Mal?
No,
Help me. Tell me a good story. Tell me something good.
I'm going to tell you. Well, I'll just say trading is life. It's
Okay.
it's it's up and down, and it is
Today's a
just for
down day. Thanks to the CNBC friends here. Dow Jones is down a buck 42 ish. Nasdaq down 32. The percentages are small too, 0.24%, not a lot. S&Ps are down 20. A little give back here. I don't see, again, I hate to keep saying this, but just kind of a lukewarm sort of summer with the market. At least now. It was great
yeah.
earlier. Now it's a little bit lukewarm. I do want to make a point about VIX today here. Up to 0.65, typical with a down market. We have a special show tomorrow. So tomorrow we have a gentleman by the name of Rob Hocking coming on, and he is going to break down VIX for us. He's over at SIBO Global Markets, and just a little prelim to tomorrow's show. He's really
Are
good with the VIX.
are we hazing him? Have we decided? We'll talk about that after the show. Yeah, how
Yeah,
we're gonna.
we'll haze him. We'll do whatever. He's really good though. You're gonna enjoy it. It's very informative. So
I'm excited.
we're gonna talk all about pricing and what it means and what you can do with it, all that kind
The
of good
fear
stuff. But anyway,
index. Yeah.
lukewarm. I say not exciting yet. Could get exciting later on, but we'll check it out. And I got to be honest. So in our day as traders, we never even looked at what the market was doing. I never even
Okay,
knew, really. I
that's
never knew. I
neat.
didn't care because of how we gained our edge
Right.
on the trading floor. So it was never up, down, or anything. It was just edge based on bid and ask. Okay, we're going to do a whole show on where the market maker edge lies. We only have a couple minutes. Let's move on to. You want to do this covered call thing, or you want to talk about what stocks to trade for retail folks? What are you thinking?
Yeah. Give. So if someone's starting out, give them the quick, rapid fire Margot Robbie in a bathtub. My favorite
Yep.
analogy from Big Short,
The
and
Big Short.
just
Yep.
quickly give what's the life of a trade. So someone who's never traded, they open their laptop, they find they can come to the Tradier hub and see who else is everyone's trading with, and log into an account, and then what's next stages?
Yeah, so this is the most daunting part of the task. You have to learn a particular software. Once you get that down, wonderful. Now you look at that screen with all those numbers on it, right? And let's go to a trade hawk real quick. So here's my option chain. It's right in front of you here, right? You can see I have Apple up here, right? And I'm in what am I in here? I'm in August 18th, which is 3 days ago, right? So you have this big, gigantic board of a bunch of options. And you can see, as I said yesterday, calls on the left, right? And if I go up a little bit, you can see that. Oops, sorry. This Mac goes different on my scroller, on my mouse. It goes different. It's opposite the other one. Calls on the left, puts on the right. Okay, so that's how I have my system set up. Middle, what do you call that? Orange model? Is that an orange, you think? That's Trade Hawk orange, by the way.
I love
That's
that
at the
orange.
money.
It's a yellow orange. Yes.
Yeah, yellow orange. I love
Sunny
it.
days.
At the money is the strike closest to the stock where the stock is trading. So what TradeHawk does is it estimates, the closest strike, and it'll change throughout the day as the stock price moves. So you'll see that yellow bar bounce around. It's a great visual. We always center you right on at the money. And for newer traders, at the money is where all the action happens. That's where the markets are the tightest. That's where the liquidity lies, open interest lies. So there's a lot of things going on at the money. That's why it's an important place to look. Okay, and I'm gonna see if I can get a different view here. Okay. So do you see that now?
Think of that. The further away from at the money you get is, boutique store. And then when you're at the money, it's like a Sunday,
Yep.
market, and there's tons of people. So that's what liquidity
Yeah,
would
you
be.
just and to answer your question about what should folks do, number one, what you need to do is you first have to find a very liquid stock. What liquid means is that there's a lot of volume and a lot of open interest, right? Volume is trading contracts intraday. Open interest is open contracts that have not been closed. So I want to see both. And if you see the columns here, I'll just look at the call side for now. And again, we're just opening, I think, here. Open interest is here. Can you see my mouse?
Yes.
Right. And you can see
Great.
the
Yeah, that's
bigger
great.
numbers. You can see the bigger numbers around at the money. So, and then we have some pretty big numbers as we go out of the money a good bit as well. So again, could be speculation. I find that with the rise of the retail trader, they tend to be trading these out of the money options. They might be
Yeah.
selling those as protection, so a covered call situation, right? And if you look at the downside puts, you have a good bit of open interest down below in the downside puts. Again, they might be buying protection as well. So we get in that covered call strategy, right? And a covered call strategy, or the combination of the two is called a collar. So if
Yeah.
you look at my position here, give me a second. Let me go back to the other view here. I got all kinds of different views. Sorry. So let's talk about this covered call real quick because we only have a few minutes left. So this 90 lot I'm short. This
Yes.
90 lot I'm long. Puts on the right, calls on the left. So I've sold 90 calls. I've bought 90 puts. Even numbers. Why 90? Let's go look at the portfolio page. Okay. So what I'm going to do is this is my portfolio. And whenever we get a screen annotation tool, I'm going to be able to draw on this screen. But until then, I've got to use my
We're
mouse.
working on it, Lex. We're working on it.
All right. So I have 88.51 shares of stock, very close to 90. I rounded up to 90. I didn't want to do 89 because it's a weird number. So I just chose 90 to protect this. So 90 covers it. Why? 90 controls 9,000 shares, right? So it's always your options times 100. Every exercise assignment in option world is times 100, right? So one contract in options controls 100 shares. So in this case, the 90 is a 9,000, which is a little bit more than my 88.51. So I had a built-in profit in Apple. I've owned these shares for a while, and Apple's made a tremendous run. Okay, just fantastic. And I don't know if I have a chart of this real quick, but look at this is wonderful. Apple's been terrific. It's crazy, right? And you can see this is a year chart. We had a little down dip here, and when was that? That was around December and beginning of the year, and then just straight up. So you know what? I said, okay, I need to protect these shares. I don't want to get rid of Apple. I still think it's a great stock. I still think it's going higher. I need to protect these shares. Excuse me. So the best way, in my opinion, to protect shares is what's called a collar. And a collar is owning a downside put and shorting an upside call. Now let's think about what could happen there. If your stock goes up through your short call, okay, being short a call is going to give me short shares at expiration if that call is in the money. So those short shares will offset my longs and poof, they go away. If the stock goes down through my long put, being long a put also gives me short shares. So both elements of this call and put give me short shares should the stock expire beneath the put or above the call, right?
And would a correct
I can tell.
would a correct analogy be, I buy this stock and I'm owning this thing, but I don't just want to own it. I want to collect a little rent. So that's your call. So I'll,
so that's an income producer, right?
Yeah.
Because I'm short it and that's going to decay. And if it expires out of the money, I make that money. But don't forget, I've got the long side on the other side. That is not an income producer, but is a protection for a big downside move. So what I tend to do is I like to get myself into what we call zero cost collars. Okay. What that means is the short I generate, the credit I generate offsets the long that I have to pay for. And if I can get that as close to zero or a little credit, that's wonderful. And the only reason I chose to do this now is I'm protecting my profits. So if you look at the protection on the graph, and this is a picture of this whole trade with the shares, I break myself out. I stop myself out at this number right here. So you can see it. It stopped. Let's call it 400,000. Okay. So if you look at this, and I got this in it now in my stock, I can lose $116,000 with this trade. It sounds like a lot, but the size of the trade is pretty big. So
Yeah.
you got to look at your numbers. So I'm willing to take a 7.5% downside is about what I calculated to protect myself. So I'm going to give that 7.5% up to the downside and be done with it. And I tighten myself up to the upside. So as this thing comes to expiration, again, this will be our last little point because we got to go. As this thing comes to expiration, if it's in the money, if I want to still own the stock, I've got to roll those options out to the next month or to 2 months out or whatever. I typically will probably put a longer put farther dated out, and I'll sell that call closer. So I have a mixed month sort of collar. And every time the call expires, or even if it gets in the money, I'll roll it to a new spot and then just keep that put station. We'll look at that in depth on another one because we have to roll.
Okay, great. And then I'll just say quickly, a collar is you own the stock, you get to collect rent, and you get car insurance, which is your put on the end so that you could really travel safely through and not just own stock and have risk on every side of you.
Right. Yeah. So if you don't have this collar on, you have stock, you lose when the stock goes down and you make when the stock goes up. One of the most famous collar trades ever was Mark Cuban when he had his company sold and Yahoo bought him.
Oh, right.
And he got tons of Yahoo stock, right?
Yeah.
Whatever, millions and millions of shares of Yahoo stock. It was worth $4 billion, whatever it was. He said, there is only one way I'm taking your inflated currency in Yahoo stock is if I can have a collar written on it, for 10 years collar. And he had a custom trade done at probably Goldman or something like that. So he did a collar, exactly what this is. But again, he did it massive, and it was all custom done. And he wanted to protect the value of his trade, which was selling his company. I think it was called broadcast.com to Yahoo. So he locked in his Yahoo stock. Well, guess what? If you look at Yahoo, it was like at the time it was in I think the hundreds or maybe higher, and Yahoo got down to 12. So can you imagine having all that stock going from 150 down to 12? He protected himself, and he probably got called away at some point. He made his values, and he kept his money. End of story. So he was very adamant about the deal had to include that ability for him to have a collar on.
Options are gold. Options are the future.
Gold. I love them.
No pun intended.
No pun intended. That's right. All right, good. Well, so come back tomorrow, Wednesday, 8:15 on the Brew. We have Rob Hocking from SIBO. We're going to talk VIX. Mal, any last parting words for Taco Tuesday? Besides the fact I'm going to have shrimp on my taco tonight.
It's 5 o'clock somewhere. It's like maybe 5 a.m. somewhere, but it's margarita.
Margarita's in our thing. All right, Mal, you have a good rest of the day. I'll see you tomorrow, and closing bell is upon us.
Thanks, Lex. Bye.
Bye.